Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we are diving into a proxy statement, which might sound boring, but trust me, it's like peeking behind the curtain of a company's annual shareholder meeting. Imagine being a fly on the wall, or even better, a shareholder in a virtual meeting. This proxy statement reveals a company asking shareholders to vote on some pretty important stuff, including a potential reverse stock split. What is that, and should we care? This report is from FGI Industries, a company that makes and sells kitchen and bathroom products. They want your vote on some key decisions at their annual meeting. The meeting is scheduled for May 28, 2025, and you can even attend virtually. Shareholders are being asked to vote on three main proposals: electing directors, approving a reverse share split, and ratifying their accounting firm. First up is electing 5 directors to the board. These are the people who oversee the company's strategy and performance. The board has nominated Kelly Zesh-Weir, David Bruce, John Chen, Todd Hasey, and Anaga Aphaid. Let's take a quick look at a few of them. David Bruce is the Chief Executive Officer, so it makes sense he's on the board. John Chen is the Executive Chairman, basically the head of the board. Then there's Todd Hasey, who works in corporate finance at Meta. That's Facebook's parent company. Kelly Zesh-Weir is in financial consulting, and Anaga Aphaid works in ethics and compliance at eBay. So it looks like the nominees have good experience. Now for the big one, the reverse share split. The company wants the option to combine their existing shares into fewer shares. This isn't like creating value, it's more like reorganizing what's already there. It will be between 1 for 2 and 1 for 15, meaning they could take up to 15 shares and turn them into just one share. Why would they do this? The main goal is to increase the company's stock price. FGI Industries needs to keep its stock price above a certain level to stay listed on the Nasdaq stock market. Think of it like a game. If you don't meet the requirement, you are out. A reverse split can make the stock price go up, at least temporarily, but it doesn't change the underlying value of the company. If the stock price still doesn't stay up, they might have to do another split or get kicked off the Nasdaq. What happens if you end up with less than 1 share after the split? The company will sell those fractions and give you the cash. So if you have only a few shares, you might get cashed out. There are also some potential tax consequences to consider. If this split qualifies as a reorganization, then you won't recognize any gain or loss as a result of the split unless you get cash for a fractional share. If you sell that fractional share, there may be tax implications. Always good to check with a tax advisor. It is important to know that there are risks involved with the reverse share split. The market may not react positively. Finally, shareholders are asked to ratify the selection of Marcum L as the company's independent accounting firm. This is a standard procedure, basically asking if you agree with the company's choice for auditors. Here is the moment of truth. Let's dive into the money. How much did this accounting firm charge FGI? In 2024, audit fees were $440,000, the same as the previous year. This is what they paid Marcum to check their financial statements. There were also audit-related fees of $27,500. This is what they paid for comfort letters and registration statement filings. All of this work was pre-approved by the audit committee. Now let's talk about the folks at the top. How much are they making? The executives get a compensation package which includes salary, bonus opportunities, and some other benefits such as health and retirement plans and car allowances. David Bruce, the CEO, made a base salary of $300,000. John Chen, the executive chairman, made $200,000. Robert Karmelevitz, who was the executive vice president USA, had a base salary of $271,421. There is also a management incentive plan, or MIB. This is basically a bonus based on how well the company performs. For 2024, no bonuses were paid since the performance targets weren't met. Executives can also receive equity in the company, such as stock options and restricted stock units. This gives them a stake in the company's success. Let's check this compensation table for more info. David Bruce's total compensation in 2024 was $73,189. In addition to his salary and share awards, he received other compensation of $30.65 and $50 in $650, including car allowance payments. John Chen's total compensation was $580,394, a substantial rise from $50,000 the previous year. Robert Karmelevich's compensation was $348, slightly up from $39.48, slightly up from $39.64. This table shows all the stock options and share awards that executives hold but haven't yet received. It shows the awards from different years, different exercise prices. That's how much it costs to buy the shares and when they expire. How about the directors, the ones overseeing the company? They get $40,000 a year plus stock options. Committee chairs get extra. For example, the audit committee chair gets an extra $15,000. Foremost Groups Limited owns 71.1% of the company, so they are by far the biggest shareholder. First Wilshire Securities Management owns 7.8%. Since Foremost owns so much of FGI, there are some transactions between the companies. The board has a policy to review these to make sure they are fair. There are shared services agreements. FGI provides some services to Foremost and Foremost provides some services to FGI. This might include things like IT support or human resources. The company also has agreements to protect its directors and officers from certain legal liabilities. It's important that some of the directors are independent, meaning they don't have close ties to the company. The board has determined that Todd Hasey, Kelly Zesh-Weir and Anaga Apaid are independent. If you want more information, you can check out the company's annual report on their website or the SEC's website. That is it for this proxy statement. So what's the story here? FGI Industries is trying to boost its stock price with a reverse split. Whether that works is the big question. But it is important to be aware of the risks of that strategy. It is important to be aware of the risks with the stock split. The board has the power to implement the reverse split, and there is not much in the way of checks from external shareholders to challenge it. Thanks for watching. If you found this helpful, please like, comment and subscribe for more corporate deep dives.